GameStop Nation. A credible source has revealed alarming information. A market crash is looming, driven by billions of illegally created naked GameStop shares, often called phantom shares. These shares, if forced to be bought back, could send GameStop's price soaring to unprecedented levels. But the implications go far beyond a single stock. Today, I'll unpack this complex issue, expose the mechanisms behind it, and highlight the devastating consequences for millions of Americans. Please note, this is not financial advice. My aim is to inform and raise awareness based on the information at hand. Let's start with the core issue: naked short selling. This is the illegal practice of selling shares that don't exist, creating phantom shares to manipulate a stock's price downward. In GameStop's case, the scale is staggering. Billions of these illicit shares are allegedly in circulation. This isn't speculation, it's a deliberate strategy attributed to market makers, hedge funds, and, shockingly, even some regulatory bodies turning a blind eye. The 2021 GameStop short squeeze, where retail investors drove the stock from $17 to over $500, exposed this manipulation. Hedge funds lost billions, and the fallout revealed just how deep the problem runs. Now the situation is escalating. These bad actors are working tirelessly to offload their toxic positions before a potential market crash exposes them. How are they doing this? Through sophisticated financial engineering and creative accounting, tactics eerily reminiscent of the 2008 financial crisis. Back then, subprime mortgages, inherently risky, were repackaged into complex financial products like mortgage-backed securities and sold as safe investments. Today, these illegal GameStop shares and related swaps are being bundled into seemingly legitimate financial instruments. They're dressed up with smart-sounding names to obscure their true nature, making them appear as attractive opportunities to unsuspecting buyers. Who's buying these toxic assets? This is where the story turns tragic. Pension funds. Yes, the very funds safeguarding the retirement savings of millions of Americans are at risk of becoming the unwitting holders of these repackaged liabilities. Your pension, your parents, or your grandparents could be betting against GameStop without you even knowing. Why would pension managers, entrusted with protecting retirees' futures, take such risks? The answer is deeply troubling. Some may be coerced through blackmail or enticed by bribes. Others might be part of an exclusive Wall Street clique, an opaque network where loyalty to the system outweighs ethical responsibility. This isn't just a financial maneuver, it's a betrayal of trust on a massive scale. The consequences are dire. If these toxic assets infiltrate pension funds and a market crash triggers the forced buyback of naked GameStop shares, the fallout could be catastrophic. Pension funds, already strained by market volatility, could suffer significant losses. Millions of Americans, teachers, firefighters, everyday workers, could see their retirement savings decimated. The 2008 crisis showed us how quickly systemic failures ripple through the economy, and history could repeat itself if these manipulations go unchecked. But there's a glimmer of hope for some. If you own GameStop shares, the forced buyback of phantom shares could lead to substantial gains, as the price could skyrocket under the pressure of covering these shorts. This is the paradox. While GameStop investors might profit, the broader financial system could teeter on the brink, with pensioners bearing the brunt. The winners and losers in this scenario highlight a stark inequity in our markets, where retail investors occasionally outmaneuver the elite, but at a tremendous societal cost. So, what can be done? Awareness is the first step. By understanding these schemes, we can demand greater transparency and accountability from regulators and financial institutions. The Securities and Exchange Commission and Department of Justice must investigate claims of naked shorting and market manipulation with urgency. Pension fund managers need to scrutinize their investments and reject dubious financial products, no matter how cleverly packaged. And as individuals, we must stay informed, question the system, and advocate for reforms that protect the vulnerable. In conclusion, the leaked information about naked GameStop shares and their repackaging into toxic financial products is a warning we cannot ignore. It exposes a financial system riddled with manipulation, where the powerful gamble with the futures of ordinary Americans. While GameStop investors may see gains, the potential collapse of pension funds threatens millions. This is not financial advice, but a call to action. We must confront these injustices before another crisis engulfs us. The stakes are too high to remain silent. ANC